Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago. Thank you for joining us. Well, the federal government says it is weighing its options over the closure of shops belonging to Nigerian traders in Ghana. Now, last week, a video of Nigerian traders lamenting the closure of their shops over failure to register with the Ghana Investment Promotion Council, GIPC, went viral. The traders say their shops were locked up by authorities who demanded evidence of their GIPC registration for general trading. The requirement is $1 million minimum foreign equity, while registration fee is about 31,500 cedis. Well, let's watch this.
My shop. Don't touch my phone, it's my right. You don't have any, it's my right, don't touch my phone. They are closing my shop. I have been paying tax since 2007. I'm doing everything they can see. It is wrong. And this is abnormal. What they are doing, African life matter. Nigeria life matters here in Ghana. Why are you people doing this? It is my right. They are closing my...
I'm being joined by the president of the Nigerian Traders Union in Ghana, Chukwuemeka Nnaji. I also have with me in the studio the president, Nigeria-Ghana Business Council, Bambo Ademiluyi. Thank you very much, gentlemen, for joining us on the program.
Thank you very much.
Now, Mr. Nnaji, let me start with you. What exactly is happening to Nigeria traders in Ghana? What are the issues?
Yeah, the problem started since 2007. The Ghana Union of Traders started agitation against Nigeria traders. They raised up a lot of allegations, which is, of course, false against us. And they incite the authorities to check on us, regulate us, and keep on, monitoring our activities. Of course, we have no problem with the authorities checking our documentation. But after some while, they think the authorities are slow, and the Guta members start, closing our shops themselves without waiting for the authorities to do their work. And it became a problem. This lasted since 2017-18. And finally, 2019, they closed the area called Kumasi in Ashanti region. And we protested against that. After 3 months, that shop was open. But the recent, the one that have now shot the camel back is the recent closure of a place called Tito Lane in the Kwame Nkrumah Circle in Accra, where they closed over 600 shops at that time. And these shops were closed for 8 good months, from December 2nd till just around July 15th when they opened it. So, and those shops were closed by the Ghanaian traders, not the authorities. But we reviewed it, and the authorities now joined, and they position themselves as if they are the one who closed those shops. All the effort we made could not be, could not attract anyone to open that shop until recent time when the building in the residence of the High Commissioner was pulled out. We protested, and also in connection with that, the authority now came and opened the shops for assessment. They did assessment for 2 days and went back. Every other thing is history. Then after some time, they also moved on to a place called Abosokai, where the spare parts dealers are applying their trade. And they give us information they are coming to assess our documentation, which we obliged. We waited for them to come, and they came and do the assessment. The problem we have is the fact that most of us registered our businesses with the Register General, that we call CAC, and the Internal Revenue, that's Ghana Revenue Authority. We have about 3 different taxes that we pay. One is a PAYE, that have to do with personal income tax. You pay that with your workers. And another one is called business income tax. That very one, they give you assessment for the year. according to the size of your business. You can meet it or you can write to them that you cannot meet it, depends on the company. And the last one is VAT, that is the value added tax. Most of our members register with all these institutions and we are paying. But when they came to our shop, we showed them those documentation. They now ask you what GIPC registrations. And that is what we did not have because one is that GIPC registration, you have to provide $1 million cash or equity, and it must be physical. It's not as if you just make a documentation and go and they will register, you pay, because they're charging 0.5% of that money, but then they will not give you any, they will not allow you to do any registration without seeing the evidence of the money in the bank or in goods in the warehouse. And that is very difficult for us to register.
Mr. Naji, let me come in here. The Ghanaian authorities have, of course, argued that you are infringing on their trade laws. Now, were you aware of this GIPC law? That's the Act 865. Were you aware of it before doing business there?
Okay, they are not infringing in their laws because GIPC Act should be harmonized with ECOWAS protocols. And frequently, in many occasions, Minister of Trade or Minister in charge of Foreign Affairs will always say that the ECOWAS citizens, anytime we raise objection, the ECOWAS citizens are not, affected by the GIPC law because that law are made for foreigners. We are citizens of ECOWAS, and I think we should be, taken so because those kind of law in every other ECOWAS countries are not affected Ghanaians. And the Ghana as a country should also know what they have signed into and they harmonize their law in that effect.
All right, Mr. Naji, just hold your thoughts there. Mr. Ademiluyi, now you've listened to what Mr. Naji has to say there. Particularly what caught my attention is what he just said about the ECOWAS law. How does this fit into the whole conversation about ECOWAS and integration of the sub-region?
Well, the Nigerian Ghana Business Council has tried severally. We've met, I think, 2 ministers in 2 regimes trying to resolve this issue. And our stand is that you cannot make a law that goes against a treaty which you already signed into. The ECOWAS Treaty guarantees free movement for all nationals, right of establishment of business. It guarantees equal treatment of all nationals wherever they are, and it also guarantees right of abode. When you now make a law that goes against all this, that means you are going against that thing, that spirit which you signed into, and we think is irregular. We've made this clear to the 2 ministers we have met. We've had seminars, we've had workshops in Lagos, in Accra, and each time what we are told is that, oh, Nigeria is our big brother, we can't treat them anyhow. But these days...
Now, I mean, this is not the first time.
Yes, these days,
sort of a thing is,
the younger brother keeps caning the big brother.
Just wondering, how have these cases, the previous cases, how have it been resolved?
Most of the time, they come in and make moves to resolve. And after that, they let go. And unfortunately, people relax. Even our government relaxes, I'm sorry to say. But I think it is time now for the 2 governments to sit down. They just have to sit down. The ministries of trade, the ministries of foreign affairs of the 2 countries have to sit down with ECOWAS in attendance, with ECOWAS, and let ECOWAS preside over this matter. And let ECOWAS interpret the spirit and the treaty to the 2 countries so that we stop hurting each other. It is most unfair. I have friends in Nigeria that I've known since birth who are Ghanaians. In fact, 2 of them have relocated back in their 60s to Ghana, and they have businesses here. Should I now go and carry a cutlass and say, oh, you must go, you must go? It's not something that should be happening between Nigeria and Ghana. I think some maturity and some responsibility needs to come to play on behalf of the 2 countries. We have to sit down and work this thing out. It is totally uncalled for, it's unheard for, it is not fair at all on the 2 countries.
All right, now, Mr. Naji, is it only the Nigerian traders that were targeted on this?
Yes. Even though the news will carry it to be a foreigners, but it's Nigerians. I can show you the shops of Chinese that are open. Nobody have, visited them. There's a time that normally they can go to all the shops just to public display, but mainly their target is Nigeria. Then when you ask, they say because we are more, we are more in number, which of course is true, but they are targeting Nigerians actually.
Now, was the Nigerian embassy able to do anything? Has the Nigerian government contacted you on this particular issue?
Yes, we are working with the Nigerian embassy. They have always stand by us. Their door is always open. The charge d'affaires, we had a meeting with her. After the closure, we immediately ran to the commission. She made herself available. We discussed. The team came. We look at everything. When our ambassador, the former ambassador, Ambassador Bike was here, he do visit himself. He call us on phone. He advised. Nigerian mission here have been playing their part. The problem we're having is that the fund we're getting from the federal is very, very slow. We would like them to, speed up things. We will be available if we are being called to have a meeting so that details of what is going on will be, made clear. We have already written letters, and I believe the High Commission will be sending those letters at the appropriate quarter to ascertain. The response they give us is very, very prompt from the High Commission.
All right, Mr. Adinuli, do you think this may just be a retaliatory, action resulting from the border closure, which has also, affected the Ghanaian economy?
I hear it is, because I've called a lot of people in Accra, and I hear what people are saying is, after all, Nigeria closed its border against Ghana. And that is not true. I personally intervened with the with Lagos Chamber of Commerce and Industries to make sure that Ghanaian goods came in for the Lagos Trade Fair. They came in a convoy unharassed, they left in a convoy unharassed, and they went back to Ghana, no problem. If Ghanaian goods were to come to Nigeria, as long as they are Ghanaian goods produced in Ghana, not smuggled goods. We're not talking of rice. We're not talking of all those things that are smuggled, which is what Nigeria is targeting. If Ghanaian goods need to come to Nigeria and their position is articulated properly like we did in Lagos Chambers, I am sure that they will come in. Because Nigeria was not hard. I was involved in that. And the goods came in. We had a good show. We had the Ghana stand, beautiful Ghana stand at the Lagos Trade Fair just in November here. So I don't know why they should say that Nigeria closed the border. We closed the border against Benin Republic because smuggled goods were coming from there.
Now, in a few months' time, the AFCTA is expected to, take effect. What would this mean for this treaty?
I don't think it will work well if we don't really sit down and articulate positions properly. We have to be very careful because we might just be going into something that will cause more chaos. And I think the two governments must start now. Just this morning, I got another video of fracas in Circle. Circle is a marketplace in Accra. And there were exchange of foodstuffs. Let it not come to a position where people start dying. It's not proper.
Okay, let me get to Mr. Naji. Is there any other inflictions beyond the closure of shops?
Yes, we are pursuing a lot here in Ghana for a long time now. Even from the immigration, the treatment we are receiving from immigration is not proper. Our permit can last as long as 6 months at the hand of immigration officer, and they will not renew for us. Most of Nigerians living here, even with the COVID-19 and every other things, our passport and the business permit is actually expired, and it's very difficult for us to get this renewed. And they keep on increasing the prices every day. They will introduce one thing and another. Before you renew your permit here, you have to pay $60 for non-citizen ID card, which you renew every year. You also have to now go for COVID-19 test, which is $100. Then the charge now is for the permit is 400 NRCs, which is around $70. But then I think they are trying to put everybody on a working permit, which is $500. This is the problem we are facing here. They are not giving us a smooth, operation, because there's a lot of laws, even this issue of GIPC or maybe ECOWAS protocol. Ghanaian law permits someone to have a permanent stay that can allow you to do business without harassment after after 10 years of resident permit. And those things they're not even given to us. So several areas.
Wow. Yeah, Mr. Ademili, while we wait for the federal government to really do something about this, what advice would you have for Nigerian traders themselves in Ghana?
My advice is don't resort to violence. For God's sake, if they close your shop, if they want to close your shop, let them close it. I'm sure this will be resolved, like it was resolved last year. This happened, it's been happening every year. It's like it's a yearly occurrence. Let them close the shop. Don't fight. Because in that video, I saw a woman who stood firm, and they really, really rough-handled her. For a woman of her age, she could just have dropped dead. So please, let them close it. I think the government, because driving here, I heard that the federal government has intervened. They have said they are going to ECOWAS to call for a discussion. I think that needs to be done quickly. But in the time being, the Ghanaian traders should please just let peace reign. Let them just relax. It's unfair. It is not a usual thing. But please just relax.
All right. Yeah, Mr. Naja, I'm sure you heard from Mr. Ademili the advice he is given. Be calm. I guess everything will be all right. Thank you very much, gentlemen, for being on the show. We'll continue to keep it up on this particular issue. So I was speaking with the president of the Nigeria Traders Union in Ghana, Chukwuemeka Naji, and of course, the president, Nigeria Ghana Business Council, Mr. Bambo Ademili. Thank you very much, gentlemen, for being on the show. I will take a break now. When we come back, we look at the commodities market. Do stay with us. Nigeria's inflation rate rose to 12.82% in the month of July, the highest ever recorded for the past 27 months. And that's where I will start my conversation on the domestic commodities market with Temitope Odubide of Financial Derivatives Company. Hi, Tope.
Hi, good morning.
Good to see you.
Good
morning. 12.82%. Well, you saw this coming, right? This is in line with your forecast. So what are the market fundamentals or factors that perhaps must have driven this growth?
Okay. So like you said, it was in line with our projection, our estimate of 12.8%. And we saw that it was the 11th consecutive monthly increase. And, you know, we saw that food inflation remained a major culprit, right? We saw that it increased by 0.3% to 15.48%. And, you know, that's interesting because this is the harvest season. This is a season where, you know, we're supposed to see the influx of, you know, some of these domestic commodities, and that should, you know, the increased supply should bring down prices.
So why is it rising?
Because we're seeing that, you know, there's still that, as much as we talk about the global chain, supply chain disruptions, we also had, you know, those domestic supply chain disruptions due to the COVID pandemic. We saw that, you know, during the lockdown restrictions, getting goods from the farms to the market was a challenge. And we see that those challenges still linger on. And that's the reason why food inflation is still stubbornly high at 15.48%. We're still seeing the disruptions to supply of these domestic commodities. But, you know, the good news that we saw is that, you know, core inflation, you know, that was kind of surprising. But, you know,
So
we
what
saw
does that imply?
That implies that, you know, there's still that, you know, when you look at core inflation, that's, you know, you're removing all seasonalities of, you know, agri-commodities, harvest season, planting season, seasonalities. We're looking at factors like, you know, exchange rates. You know, we saw that there was that limited, if we can use that word, exchange rate pass-through effect, because your global supply chain disruptions are not fully back to pre-pandemic levels. So you see that that has not, you know, while we have the currency devaluation, we have not seen the full effect of what it would have on imported goods, because you're still having that supply chain disruptions from, you know, your markets abroad. But when everything fully opens up, we expect to see that imported, and that's why imported inflation just increased marginally by 0.1%. You know, when we open up everywhere, and as we saw, the international airports are going to be reopened, we would see that effect play out on imported inflation.
Now, this food inflation that we've seen rising, and then with the pressure on the foreign exchange market, and then we've seen the foreign reserve dwindling. What's the correlation there? Does it have any impact on the food, you know, inflation?
Yeah, so we would expect that impact, the impact of currency, anything that happens to the currency, on your core inflation or on your imported inflation, you know. So because those are, you know, where your exchange rates dynamics will play out. In your imported inflation, how much do manufacturers use to, you know, import these inputs, and how would that reflect on, you know, the goods you see in the market? Because we're a highly import-dependent country, would see that, you know, your imported goods that you will find in your supermarket will start to increase, and we're already seeing that trend already playing out. You know, your flour too would have an impact on your bread, which is a domestically produced commodity. You know, that ripple effect, we'll see that play out as we open up the
Now, in your inflation forecast, you noted that Nigeria is not an inflation, you know, outlier in the African continent. Now, how would you compare Nigeria with other African countries like South Africa, Ghana, Angola, and of course Uganda?
You know, because we tend to, you know, feel like this is a Nigeria-specific problem of rising inflation. It's really not, because if you look at other countries to their, you know, as long as you are import-dependent and you have that dependency on imported goods, you would see your inflation increase. And, you know, especially in a time of, you know, dwindling consumer disposable income, and you see currency, African currencies, they are weakening in light of this COVID pandemic. So we see that other African countries too, our peers in other sub-Saharan African countries too, are experiencing rising inflation. And, you know, but, you know, you see that the policymakers are now having to choose between rising inflation or supporting growth, because all these African economies generally have been affected by this pandemic. And that's the reason why many policymakers are choosing to go in the line of growth and, you know, bringing down policy rates to support growth and boost employment. But inflation is not a Nigeria-specific problem.
Now, 91-day Treasury bill rate is flat at 1.2% per annum. What's the correlation between this and the inflation number?
Okay, because you see that when investors borrow money to the government using T-bills, right, what you get is not really what you get if you put it in context with inflation. Because you see that at 91-day T-bills at the last auction, primary market auction, was about 1.2%. And inflation is rising to 12.82%. So if you put that side by side, you see that really what you're getting is a negative real rate of return of about minus 11.62%. And that has widened from what it was in January at minus 8.63%. So really, there's that disincentive to save. You don't, because when you put what you're getting versus what inflation is going to erode out, you are less likely to save. But the only thing T-bills have going for it right now and other government securities is the risk-free aspect of those securities, because you see that in light of these of this pandemic, the uncertainty everywhere else, you want to invest in something certain. You want that certainty from what you invest, and that's why most investors tend to go for risk-free assets like government securities. But really, you are less likely to save when you put it against inflation, and that would affect investment finance of government. And that's why you're seeing that we are more desperate, if you will, for these multilateral agencies, funds. We need them, like yesterday. So that's what's going on.
So do you see inflation hitting like 13% in August?
It is likely. It is likely because if you look at what happened in August that could push it a bit further, you could look at things like the Third Milan Bridge closure that happened at the end of July rather, which will now start to play out in August. You would have those supply chain disruptions that are still there, but by and large, harvest season should start to have an impact, lead to gradually, but that would still not be enough to push it. Maybe, but it will still not be enough to not put inflation to 13%.
All right, let's look at your commodity price movement there. What are the major drivers? Can you take us through that?
Okay, so we see that, like as I mentioned earlier, flour, we see that there's been that increase. That is, exchange rate passed through. You see that limited impact in commodities such as flour, and that could start to play out in domestic commodities like bread, And we also see that there are other commodities are also on the increase. We see Gary is also on the increase. But when you look at the harvest season effect, which should start to play out, we're seeing that is already playing out in commodities such as yam. When you see the new harvest and, you see a lot of new yam in the market now, and that is already bringing down the price of yam from what it was at 3,000 for a medium size to about 1,500 for a medium size. So we see that harvest season playing out only in yam, but we should expect to see the harvest effect play out in more commodities as we go on.
Now, you did mention, of course, the opening of the international airports. That will be on August 29, but that's coming with few flights. But then Ghana will be opening up its international airport September 1, and they're opening up fully. Wouldn't that have some kind of implication?
Yeah, I mean, it would have some implications, and we see that there's only 2 airports that are going to open, Lagos and Abuja. I mean, they are part of the Golden Triangle, and I feel like the most important impact it will have is on forex, because as you open up, we're still having that forex rationing challenges. Before, what was happening was maybe speculative, it was more speculative demand. As you see, Naira devaluation, you just buy your dollars and, you keep it. But now we're going to see that the traders, the manufacturers, the students, the people going on tours, that have missed their family and friends, they're all going to be fighting for this limited dollar availability. So it will be like, where are you going to get the dollars from? How are you going to get it? And as
well,
what
the CBN is about to resume giving out
to BDCs.
Selling to BDCs.
Yes. We see that that should maybe it should ease a bit of the pressure, but it's still not enough, because when you look at the availability of this forex, we look at oil price is still not at where we used to be. Oil production has fallen to about 1.4 million barrels per day to keep up with our OPEC quota. So we see that there's that pressure on revenue, on dollar availability. So there will still be that shortage, and as more pressure comes into the market, we should see an impact on Naira.
Now, when CBN starts, when it resumes selling to the BDCs, are we likely to see the exchange rate at parallel market coming down? Currently, we have 475.
Yes. I mean, it really depends on how frequent and at what magnitude are they selling to the BDCs. If you just sell once a week and you see that the demand pressure triples when you open up the market, it really might not be enough to bring down the value of the Naira at the parallel market. It might not be sufficient, because what magnitude and what frequency are you selling to the BDCs as is going to be what will be on the focus of these demand, of these end users. And already end users are already jittery. End users are already saying what is happening to the Naira, you know, and as they're excited for the airports to be open, they're also worried about what rates they're going to be getting the dollar
And the
at.
availability.
Yes.
Right, let's look at the oil market. Investors, of course, are waiting on the ministerial OPEC Plus committee meeting. They're supposed to meet, that's tomorrow,
yes, tomorrow.
to review the oil market and compliance, you know, with the Global Supply Reduction Pact. Do you see them making any change?
I mean, I think what they will focus on is the gloomy demand outlook, irrespective of the fact that economies are opening up. We still see that the demand outlook still remains gloomy. Even OPEC itself has come out to revise its 2020 oil demand forecast, and according to OPEC, oil demand should drop by about 9 million barrels per day. And if you even look at IEA, they're also projecting a decline of about 8 million barrels per day for oil demand. So by and large, they would be focusing on the oil demand outlook, because that would drive if oil can start to climb back up. As much as, you know, the members have reduced their supply to, you know, prop up prices a bit, it still remains dependent on oil demand and how soon the oil demand recovery will start, and, you know, if it can be sustained.
All right, thank you for your time, Temitope.
Thank you very much.
Temitope Olumide is one of the research analysts with Financial Derivatives Company. We'll take a moment. We'll be back.
Now this is more like it, right? We want the best quality ingredients when we cook. But when it comes to salt, we care less. We say salt is salt. Well, I care about my salt. It goes into my food and my body. So I use Dangote salt. Dangote salt is high-quality salt that is refined and iodized to give great taste to my meals and also to support my family's health and well-being. It's time to care about your salt.
All right, just before we look at the markets, let's see what's happening on the global oil market this morning. Prices slipped, though they mostly held onto overnight gains after OPEC Plus said the producer grouping is almost fully complying with output cuts to support prices amid a drop in demand for fuels due to the coronavirus pandemic. Brent crude was down 22 cents at $45.15 a barrel after gaining 1.3% on Monday. U.S. crude was down 23 cents at $42.66 a barrel, having risen 2.1% in the previous session. Compliance with OPEC Plus oil output cuts was seen at around 97% in July. The oil producers curbed output by record levels to reduce worldwide inventories as demand collapsed from the pandemic. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC Plus, in August to reduce their agreed cuts to 7.7 million barrels per day from 9.7 million barrels per day previously, as prices started picking up in recent months. The U.S. Energy Information Administration last week reduced its global oil demand forecast, suggesting a smaller than previously expected reduction in global inventories. And for a quick review of Monday's equities trading, we have Tempo. Well, not a good start to the week, Tempo.
Not at all, Chimezie. We saw some profits taking, we saw some bargain hunting, yet we saw some sell down in the markets yesterday. Some folks had to take profits on Dangote Cement yesterday. Save for that, we would have closed in the positive direction because we know that there were quite some gains that we saw on MTN and, of course, Unilever that has recently been moderating its year-to-date losses, which has now moderated to some 33 basis points plus, or 33% plus, rather, in the market. Again, recall that this was the key gainer in the market yesterday. It was up by 10% as opposed to some other losses that we have on Livestock PLC that led the laggards list. So, but basically, we opened the week with a decline of 0.27% yesterday. That represents some 35 billion naira subtraction from the equity capitalization, which we still have settling at 13.1 trillion naira. But look at the volume of transactions. It was down yesterday in spite of the positive investor sentiment that we have in the market. Investor sentiment was positive yesterday. We had some 17 gainers in the market, outweighing the losses that we have in the market. And I said earlier, Unilever was the top loser, top gainer, I beg your pardon, in the market. But if you look at the volume of transaction, which settled lower by some 67%, we saw GT Bank contributing more to what we saw in that space. GT Bank was down, actually, but then we saw some 18 million units of its shares contributed to this, and that was the highest. That made it the top traded security in the market yesterday. For the value of transaction, it was a decline of 59% yesterday compared to what we had done in the preceding trading session. Then the deals was also in red. But let's look at the performance of the sectors. Banking stocks were down yesterday, 0.24%. That's because we saw a 2.54% decline on Sterling Bank, and of course, ETI, Ecobank Transnational Incorporated, was also down. Access Bank that also announced some $93 million loan, which is a Tier 2 facility yesterday, is a major company that was down by some 78 basis points yesterday. Then coupled with the losses that we saw on GT Bank that's recorded some 456 million naira worth of transactions yesterday. All of that put together brought down the banking stocks yesterday, and that also impacted the top-line performance of the markets yesterday. But look at the consumer goods space. I told you earlier that Unilever was positive by 10% and was the most actively traded. It was actually the top gainer in the markets yesterday. That, again, is because in recent times we have seen the interest of the Unilever overseas in this particular company here in Nigeria. They actually hold some 70% stake in the company, but they are beginning to increase it at this point. They increased it by buying some more 17 million units plus of the shares recently. Then that moderated the 44-point-something% year-to-date losses on Unilever to 33.5 or thereabouts now. So that has reduced that. And in recent times, we've been seeing the interest of a lot of investors in this particular company, coupled with the fact that we saw some 9% gains on NNFM, that would be Northern Nigeria Flour Mill Company yesterday, and of course a couple of other consumer goods companies. Put all that together, it translated to the 0.23% gain that we saw here yesterday. In fact, as a matter of fact, at some point it was higher than this, but when they did the revaluation of this sector yesterday, it came down to 0.23%. But the industrial goods side of the market has not been doing good lately. Now, for Kiltex Plc, which is an Anambra-based cable-making company, we saw some profits taken on this particular company yesterday. That was by some 2.78%. That's the decline that we saw on Kiltex yesterday. It's an SME, but then that also impacted the sector. But the heavyweights, Dangote Cement was down by some 78 basis points yesterday, and that's translated to the 0.38% decline that we saw in this space yesterday. Let's go to the insurance segment of the market, which also recorded some gains yesterday, just as we saw in the consumer goods space. Of course, here we saw Mansard Insurance rising by some 9%. It's the second consecutive day of, or second consecutive session of gain that we are seeing on that particular company. Then we have a couple of other companies here. Cornerstone was also up by some 8% plus. All that pushed up these indices yesterday to 2.89% at the end of the day. And then you have the oil and gas segment of the market. Japol actually was up. Oando actually posted gains, but then we saw investors now betting more on Adova PLC, which has actually fallen to some 11, 12 naira in recent time. But yesterday, the gains that we saw there, which is 9.41%, pushed up the price to 13.95%. Of course, this is one of the companies that has really sound fundamentals in the market. So folks have done the valuations and they realize that there's an opportunity in buying Adova PLC. And then let's hope that this will continue before we see some huge profits taken that will bring down the company again. But I said earlier that Oando actually paused, but we saw Japol rising yesterday, still at 21 kobo. And of course, all other companies that we have in the energy space, not so much of activity there, except for what we saw on the NASD OTC. And that's what we'll be talking about when we come back to talk more about the markets, Chimeze.
So, Temple, hang in there. We'll get back to you. We'll take a break now. When we come back, we'll do a crossover to London. Come back to you. Thanks for staying tuned. Let's bring in Simon now for London Market Report. Hello, Simon. Good morning. Well, starting off with corporate news, Marks & Spencer plans to cut 7,000 jobs. Are things that bad for this retailer?
Yeah, it is a famous British brand, Marks & Spencer's. It has a long and successful history here, but it's also one of those stores that's seen as being very traditional, maybe a bit slow to innovate compared to its competitors. Total sales in its clothing and home arm dropped by 29.9% in the 8 weeks since shops reopened after the main virus lockdown restrictions, with store sales also tumbling almost 50%, and online sales, unsurprisingly, well, they were massively up, close to 40%. Interestingly, in the last 13 weeks, food sales have increased by a small amount, 2.5%, but it's not enough. And M&S said it hoped a significant amount of the cuts, about a tenth of its workforce, will be voluntary redundancy and early retirement. At the height of the lockdown, the M&S's main boss, Steve Rose, said customers might never shop the same way again after the crisis. And last month, the retailer announced 950 store management and head office jobs were at risk because it needed to accelerate its restructuring. It seems like the traditional department stores that were top of the market 20 years ago, that includes M&S, are now struggling to keep up with the trends made popular by the likes of Amazon, where you can obviously buy so much so quickly and so cheaply online. And all of that obviously is really sort of accelerated by the coronavirus that we've seen. And yeah, it looks like M&S is going through tough times.
And Ryanair says it will cancel almost 1 in 5 flights scheduled for September and October. Why is Ryanair taking this move at this time?
Yeah, well, the main reason given by Ryanair is that this is driven by uncertainty over recent COVID case rates in some EU countries. So I guess like localised lockdowns. The UK, for example, has reimposed 14-day quarantines on travellers coming from countries including Spain, France and Sweden, while Ireland has similar travel restrictions for countries including Germany and the UK. Ryanair had increased flights to 60% of its normal schedule this month after resuming services in July, expecting obviously a big boom in August when lockdown restrictions had eased in many countries. But a spokesman said that those capacity cuts and frequency reductions for the months of September and October are unavoidable given the recent weaknesses in forward bookings due to COVID restrictions in a number of EU countries. Meanwhile, the rival airline EasyJet has confirmed that it will close bases at Stansted, Southend and Newcastle with a loss of around 670 jobs. There could be further job reductions of about 1,200, according to EasyJet, if they work through plans to cut staff due to the pandemic. So tough times for the aviation industry continues. Many people choosing to holiday in their home countries this summer rather than going abroad and potentially facing those quarantine measures. A lot of people don't want to go to a country and then suddenly come back and realise they've got to stay at home for 2 weeks.
I can imagine. Well, how are the markets opening up today and what are the headline grabbers on investors' radar?
Yeah, well, Britain's FTSE 100 index opened 10 points lower this morning at 6,118, but that has recovered a little in the last few minutes to be around 0.2% higher. A big piece of business news today is the British outsourcer Capita Plc, which posted a £28.5 million loss for the first half of 2020. Their revenues taking a big hit due to the coronavirus. Of course, they said they would not generate sustainable cash flow for up to 2 years. Investors today will be watching trade talks closely. EU and UK Brexit negotiators will meet in Brussels to try and thrash out an agreement on the remaining issues. The biggest stumbling blocks include EU access to UK fishing waters and the degree to which EU rules might apply to the UK industry in order to ensure the UK does not gain an unfair advantage. Brexit trade negotiations are likely to become more of a driver of sterling and the pound as we approach the October deadline. In the market, analysts and investors often assume that politicians have an incentive to go to the 11th hour, which of course they've done before. Why would they obviously concede ground to the opposition when there's more time to go? So I think it's just going to be shaky ground for markets and investors over the next few days and weeks as those Brexit talks continue. And at the moment, it's a kind of stalemate. And we may see, like we've already seen before, a kind of last-minute deadline where they suddenly rush to an agreement. But it's tough times for investors to try and call that one at the moment.
Well, I'm sure we'll get to see how those are playing out much later in the day.
Thanks.
And back here, Temple.
Talk about the local markets, Chimeze, and see how we can make more nairas that will eventually translate to some FX for us. First, we talk about the NASD OTC. Look at the market capitalization of this particular unlisted securities market. it has been rising lately. The day before yesterday, it had risen by more than 1%. And of course, at the preceding session, the session before Monday, it was up by more than 1%. And I'm talking about Friday. But yesterday, when the market resumed, we saw an appreciation of 0.70%. This is a plus to this market. Look at the index. It's rising 718.43. Of course, that's a major point in the market. These used to be at 525 billion naira. It's now 527 billion naira. In fact, there's a point to it, 0.73. So this tells you that there are opportunities here. If you're tired of other spaces, check out what they have at the NASD OTC. I'm not marketing that, but I'm telling you where you can push you can look at for opportunities and help rebalance your portfolio. Which are the companies, what are the companies that we have as the major movers here? CSCS, the depository of the Nigerian capital market, is trading, did some 1,500 units yesterday. If you add that to this, it's a major performance, coupled with what we've seen from WAMCO, and of course, the earnings of the NASD OTC itself is out. They did some 36 billion naira worth of transactions, or some kind of a profit rather, in terms of bottom line for the first half of the year. Now, look at the value of transaction yesterday alone. It was 7.17 million naira, and all we had 7 deals in totals. Now let's move on to the bond side of the market, the debt side of the market. Of course, here we've got the bonds market. Things are a little bit bearish, again, because folks are placing their eyes, they're watching the monthly bond auction that will be taking place tomorrow. The federal government, through the DMO, the Debt Management Office, will be raising 150 billion naira, or will be offering 150 billion naira. So here, the secondary side of the market, folks were quite jittery. They looked at the longer end of the curve, where they could be, where they will be able to, where we had more spreads yesterday. We had more spreads on the 2049 paper, a benchmark paper, and of course 2025. Then you have other papers there. But if you look at what we had at the shorter end of the curve, folks had more offers in that space. In total, we had 32 deals at the secondary side of the market yesterday for a value of 45 billion naira. But here we got more spreads in the market. Let's look at the NTB space. Here we've been seeing investors beginning to cherry pick. In recent times, we've been seeing these transactions here turning into billions of naira. 2.41 billion naira worth of transaction was what we got there yesterday. Folks got more interested at the longer end of the curve. The 12th of August 2021 paper, following the auction that took place last week, was a major area that investors brought in for their funds to. Now let's look at the open market side of the open market operation side of the markets, where of course we saw some more a few interest again, because we're going to have some tight liquidity system at this point in time. Folks were bidding at around 4% yesterday, but eventually we had 14 deals, and of course for a value of 11.56 billion naira. Joining us on the phone to talk about the FX space, which you don't have numbers for here now, is Ajibola Ero Phillips, who is the head of FX trading at FBN Quest Merchant Bank. Thank you so much for joining us on the program. But Ajibola, yesterday we heard from the federal government that, yes, flights will be reopening from the 29th of August, and we understand that that will support the demand and supply kind of equilibrium that we need for FX space. Is that correct?
That's the hope, considering that CBN has not been today for that market space specifically for people that are traveling. And then, that has cascaded into the parallel market with rates, reaching a high of 475, and a huge disparity between that and the official market. So the hope is that with the resumption of flights now, CBN is able to sell exclusively for PTA travel, and then some school fees and invisibles and things like that. So you expect that would have some effect on the market and on that market segment, and begin to bring the market a little bit downward.
Okay, so yesterday at the I and EFX window, we saw a situation where, of course, the supplies has really been lean, but we saw an appreciation of around 22 kobo yesterday. And of course, the parallel market was like 1 naira 75 kobo or thereabout. I think the dollar actually touched 476 naira 50 kobo yesterday, eventually all the way from 475 naira. Give us a sense of what to expect today in the markets.
For the R&E market, it's still going to be the same. The volume traded in that market has really dwindled right now, and that's just because of all of the things we have globally. Most of the sources of supply are well wasted right now, and it's trying to exit the market. But then we don't expect anything major to happen. We expect that average volume traded will still be around this level, 20, 25 million, except, you get some huge inflow from somewhere. But we expect the market to be around this level. In terms of rates, we expect that the rates will still hold around 86 to 87. That band is where the market is still traded today.
Ajibola Phillips, Head of FX Trading at FBN Quest Merchant Bank, thank you for sharing your thoughts with us on the program. We appreciate them. Chimeze, it's back to you. Thanks.
Thank you, Temple. Well, for FX, we can only hope. But I think I will take your advice and look into the unlisted securities. All right, on that note, we draw the curtain on today's edition of the program. Thank you for being part of it. I'm Chimeze Obi Iwago.